Okay, good evening, traders, and welcome. Today, I've been talking to some of you guys by the side just to understand how your trades are going, how things are going, and because this is not your typical kind of forum, this is, I would say, a user-driven forum where you, as the user, you as the customer, I only do what you guys are asking, what you guys are requesting. And there seem to be a lot of requests on where do I take the trades? You know, yes, you told us about forex, you told us about pips, about candle, and so on. But then where? Where do we take these trades? Okay. So, and I'm glad you asked because to me, I'll teach you what I call best practice. Because best practice for me is doing forex the way it was meant to be without all the noise of indicators and all those things. And no offense to people who like indicators, okay? Indicators are good, they can help you. But to me, once you can understand the structure of the market, half your battle is done, okay? So without much further ado, we'll jump straight to the chart so that we can try first to identify what are we talking about when we talk about trading zones, and then where would we actually take those trades. Okay, so I will share a little bit here. Let me see. Oh, and I think also I found out we can download C. You don't even have download anymore. You can use C Trader on the web. So that's good news for many people who've been asking about platform, the best platform. Well, so far I've found C Trader to be the most user friendly, and you can find C Trader through many brokers. For example, I think IC Markets provides C Trader. ECN provides C Trader platform. And then also RoboForex provides C Trader platform. Now, even if you just Google, in fact, I've just sent a link in the group, and the link will take you straight to the C Trader platform on the web. No downloading necessary. So I thought today I'll even use that as part of our class. So this is C Trader platform, and the issue at hand today is to understand where do we do this trading? Where are these trading zones? Okay? And like I always tell you guys, I'm a scalper, so I'll teach you with a bias on scalping, but the principles I use are almost standard across all kinds of trades, all kinds of traders. Okay? But you'll do very well to understand just the structure of the market. And in particular, I always call it price action, so that basically just look at the charts and you make decisions on what you see, not what you hear, not what you think, but what you see. All right. Having said that, so my favorite uh, pair, and that's another thing. People have been asking me, so don't you trade other pairs? Well, before in my earlier days, I did. I traded, GBP. I traded Audi card. Euro JPY, Swiss franc, all those. And in fact, some of them were pretty good. But with a bit of experience, I learned from one of my mentors that if you focus on one particular currency, you will have the advantage of learning that currency, because that currency has every currency has almost a peculiar habit, and so you will learn the habits of that currency. So you've had people saying when they're trading, I have seen that pattern over and over and over. Yes, because the pattern appears when you trade that particular currency. So for me, I decided almost 2 years ago to stop looking at all the other currencies and I focus only on Euro USD. So I'm at a point where I can almost tell you if I see a particular move, I tell you what it's about to do. Why? Because that's the way it behaves. Okay. But I will, when I remember, I'll try and give you a little more explanation, the psychological explanation behind it. But for now, let's try and figure out where are these trading zones. So when you get a chart like this, the first thing you do is you zoom out. Where zoom out is you maximize the chart. So like now, this is the maximum. I can see, one end, which is where we are right now, today, now, and on the extreme end, this goes like November 2019. All right, and this is, uh, wait, I thought I even had, let me change the time frame. I thought I had 4 hours, but let me see if I can get 4 hours. Oops, I don't want that. Okay, yeah, I had 4 hours. That's correct. Okay, 4 hours. Now, with the 4 hour chart, I mean, I'm using that because it has less noise. The other smaller time frames has a lot of wicks and all that stuff. But the 4 hour chart, if we zoom and make it larger, you'll find that it's neater, it's nicer to look at. See, it's kind of beautiful. But the smaller time frames sometimes have a lot of noise. So you open your chart, okay, and then the first thing you ask yourself is, can I understand what's happening in the chart? Can I mark it so that it can give me the story of what's going on? Well, the answer is yes. But how do we do that? We do that by first asking ourselves, where did the market turn? I call them significant turns. And as you can see, even from this particular chart, okay, just by eyeballing it, you can see where the market has significantly turned. So those are the ones that you mark first. Okay. So you go to your drawing tool, which is on the right hand side. I hope you can see it. Okay. And you get the horizontal line. So you click on it. Okay. Okay. So just clicked. And then I come here. The first thing I look is the highest point of the chart is there. So I click on that highest point there. So that was the biggest turn I can see. Then I go back to the drawing tools, and then I ask myself at the bottom, where is the turn that I can see that is very obvious? Okay, it's right there. Now remember, when you're doing this, don't think too much. If you start thinking too much, then it's not good, because then you'll have too many, and that's not a good idea. All right. So I have two already. Can do some more. Right below this one, which is the next high. Well, the next high is somewhere here. Okay, that's pretty close to that one. Okay, so I might take these two here that are lingering there, right there. Okay, so by significant, it means that it actually turned. You can even see that actually it turned. So after that, I can look for down, down. Well, this could have been significant on the left-hand side. Okay, and again, I'm not thinking much. I'm just, drawing the lines, just like that, not thinking too much. Okay, then I look and I see up. This one was a significant turn, definitely. Okay, so this one here I can just add, and this gives us our framework there, our framework. Now, if somebody was to ask you, so then what does this mean? It means that the market respected those zones. The market respected those turning points. What do I mean by respecting? It means that if the market was coming from down going up, when it got to that point, it paused or it turned. And if it turned, it either went back down or went up. So those are significant points. So when you say trading zones, what you're saying is you are saying, like now, if I go down to a lower time frame, assuming I want to trade the 1 hour, okay, so you always mark one time frame higher, at least one time frame higher. So if I want to trade the 1 hour, I would mark the 4 hour. So I go to the 1 hour, and now you'll see there's a lot more turnings even within the 1 hour. So this last markings we had was significant as far as the 4 hour is concerned. But you'll find that even the smaller time frames still respect them. What do I mean by respecting? It means that each time the market reached there, it paused or it did something. And it is over and over and over and over. And actually, you can use that as the basis of your trading. So, in fact, I'll just start from here and just show you. At some point, you'll even get tired and you can even almost guess what the market will do next. So, so we agreed that when the market reaches those points, the market pauses. So let's pretend that we are starting from this point. Okay. We see the market goes from here, it goes up, it stops. Why? Because that's a significant point. And then it goes down again, then it stops. It didn't even go further. Then it goes up again, and then it stops. Then it goes down, and then up. It retests that place, goes up, back again. Okay, and then it's there. Keeps goes up, comes down, there, goes up, there, up, there. I can go on and on and on all day, but we'll stop there. What's the significance of this? The significance is you as a trader, even without knowing, in fact, I did this purposely. I've covered the rest of the chart on that side purposely so that you can see what will happen. And this is normally called backtesting. I keep telling you guys that you need to find out, how the trade was. If you're taking the trade, what could have happened? So it means you can almost guess where the market will go. Yeah. Why? Because we have this support and resistance, which guides you, tells you what is about to happen. So even if we didn't know, this market has come down and it's somewhere there. And if it's there, what do you think will happen next? What do you think the market will do after that? Okay. And this is a question to the house. What do you think? Anybody can volunteer to answer. Okay, we are right here. If I start moving the screen to the right, what do you think will happen? Any volunteers?
Yeah, it will go back,
Move.
probably.
Yes, it will move. But there are three options, right? At any given time, there are three options. It will either one, move back up, two, consolidate, move just right there, not go anywhere, or three, go downwards. All right. So if I click the next button here, all these markings will disappear. So bear with me a little bit. Okay, there we go. But we're here. So I'll keep moving so we can see. Oops, we were here. Okay, we are there. So if I click on it, you see what will happen. Okay, there it's moving, moving. See, it's like still on that line, not going anywhere, not going anywhere. At this point, you can say it's consolidating. And this is a 1 hour time frame. And this is a good place to take. Remember the signals I've been sending every day? That's what you do. You take advantage of this consolidation. So this is actually a trading zone. Okay. Uh, some people have other terminologies. They say it's a buying zone. Others say it's a money zone. Okay. The very moment you see the market is consolidating along a support, so this is a support. Okay. Because the next move it will make will be up or down. Do we know for sure? We don't know. But in our strategy, we don't care. We don't care whether it'll go up or down. All we know is when it makes a move, we want to be there. We want to be there taking pips. And that is why our strategy that I'm sharing with you has a very, very, very high success rate. So here, what we would do, because it's our trading zone, we would set pending orders. We would do pending buy going up or pending sell. So what do I mean by pending buy? Pending buy means a few pips above this support line, I will put a pending order buy. And if I'm to buy, where do you think I'll take profit? If it's going to go up, then the next point is this one. So I don't want to shoot for that one. That's too far away. I'll just shoot for this one here. How many pips is that? That's plenty of pips. Let me just measure it. Okay. So from here to there, that's about 80, 100 pips. So, but this is 1 hour time frame. So fine, the people who like doing the 1 hour time frame, so they'll enter their trade somewhere there. They're pending buy. But how do you put a pending buy? You right click and you see there's a buy there. Okay? You get a buy. It's supposed to be a buy stop, not buy limit. Okay? I'll figure out why this one is saying buy limit. But I just went on the web today on this one, so I'll figure out. But if you right click on your platform, you will see the options. Now, at the same time, if you think the market will go down, you also do go down and do a right click and you set your trade. This time you do a sell stop. Okay, not sell limit, but sell stop. All right. So that is around the support zone. So let's see what happened later, a few hours after that, because it will break out. And chances are, if you look this time, this must have been either in the morning, when the market was about to start, or London breakout. Yes, as you can see, it was like 8 something. Okay, so the market was about to break out in London. So let's see where it went. So at least now we know it will go up or down. Why? Because it's a zone. The zone is where people are buying or selling. All right. What happens? We click on that, and there it going, still consolidating, and it goes up. And guess what? It went up and hit your take profit. If your take profit was up there, that's exactly what it did. Okay. I hope I didn't move it too much. Okay, I don't know where we were. We must have moved it too much. It was 8. Sometimes when I make it larger, I lose our position. Okay, I think it was here. Ah, I don't know. Yeah, I think not there. I don't know. Anyway, I lost where we were because I can't remember. But yeah, I think it was here. I'm not sure. Anyway, let me zoom let me zoom it up again, but you get the idea. The idea is we're moving from one zone to the next zone. So if I was to mark these zones, this is what I would say. Okay, I would say that this zone here is zone A, okay, and then B, and then C, D, E. So the market keeps moving from one zone to the next. And once you realize that, once you know that it moves from one zone to the next, then half your job is done because you just wait when, like here, it was consolidating between C and D, and you know that it will either go up or down. Well, it chose to go up. If it chose to go up, so you probably are on the buys. And where do you take your profit? Before the next zone. Okay. And then it kind of plays around here for a while. And then you also know it will either go to the next zone, E, or come back to D. If it goes to E, it will probably touch there and stop. If it goes back to D, as you can guess, it actually touched there. Okay. Then it consolidates for a while around there. And then guess what? It's going to break either up or down. At this point, we don't care. If you enter your trades there, what happens? It went down. And where did it take profit? Next zone. You see? And this is what the market does all the time. It goes from one zone to the next, one zone to the next. So, how then do we trade this? Knowing this knowledge, how do we trade it? We trade it by first marking these zones. Okay. So, if you wanted to do like 15 minutes or 30 minutes, the way we've been doing it daily, so you go like one time frame above. No, remember we talked about the market being fractal in nature. The idea of fractal means that what is happening in the bigger time frame is exactly what happens in the smaller time frames. Okay, and I think I've given in this class examples before that if you're flying from Nairobi to Mombasa, or from Nairobi, better example, Nairobi to Kisumu, Nairobi to Entebbe, Nairobi to Mombasa, okay, from Mombasa, depending on how you're facing, it's eastwards. Okay, but Nairobi to Kisumu is westwards. Now, from the skies, you can just say, or the plane will take a straight path to the left, and then it lands in Kisumu, and you are there. Well, that is if we are in the air. So in the air, it's a straight path. But what about on the ground? Well, on the ground, it's not a straight path. Whereas it's a straight path, but on the ground, you have to go up and down, up and down. You have to go to Nakuru, then come down to Bomet, then you go up to Awasi, and then before long, you're back in Kisumu. Which means, basically, what I'm saying is you use the bigger time frame. If you know the time frame is saying we are going down, then the smaller time frame, you take advantage of that. Okay, you know that for the next 1 hour, the market will be going down. So every time it shows ugly head up, you do a sell. Okay, and this is a perfect example here. Okay, like right there. So assuming this is your the time you are actually trading. Okay, so you kind of get like a 2 for 1. First, you start with a breakout strategy. Okay, and the breakout strategy, when you see a consolidation, then you enter into the trade. Okay, but now this one, as we see it here, you start trading what you see. You know it's up there, and as you go, you see it wants to start going down, which means that yes, you can enter sales, but for me, I always tell guys, you don't want to follow the market. You want the market to come to you. So then what would I be doing? Well, I know it will retrace up a little bit. At the point where it's retracing up, okay, so the market is going down, and you know, yes, it's on a downfall, okay, but do you want to trade it when it's already going down? To me, I say no. You wait when it retraces back a little bit. So when it's retracing back, it means now it's almost countering the trend. That's the time you enter your cells. You don't enter one cell, you can enter several cells. Okay, and if you do that right here where there are greens, okay, by the time the market turns again, okay, by the time the market turns again, then you are in game. Every time I make it bigger, we lose where we were. I think I need. Huh? I'll use this the marker there. All right. So at least this one will help us so we don't lose where we are. So anyway,
In 20 minutes, we should be done.
guys, can we mute our microphones if you're talking to somebody else? So the market will come from this. Now it is resistance zone, and it will come down. As it comes down, it's rallying and wants to reach down here. So if you're going to be entering your trade, your goal is to reach here. All right. Okay. But the best place to put your cells, okay, up there is okay. The first few, candles is okay to put cells because you know it's coming down. Once you've confirmed it's coming down, but once you're in the middle here, you have to be careful. Okay? So to me, I would wait until it retraces. So when it retraces a little bit, like the green candle goes up, then that's where I enter my cells. So I always I say that this move will go like that, and then it will retrace a little bit, and then go like that, and then retrace a little bit, and then go like that, and so on. So for me, what I would do is because this was a turning point, and these first two candles will confirm that he has turned, I will initially take a few cells there, okay, just because it's turning. Chances are, when this was going up here, I was already taking my cells because I knew it was going to come and reach there and turn. So right here, I would be taking sell stop because this is the breakout here. You can see this. This is a breakout. So as the market is going up, and I know there's some serious support here, I would start taking sells. So my sells would be from there, okay, from there as we go up until it turns. So by the time it's turning and now it's moving down, I am in profit. I'm in profit all the way. Okay? Probably till about there. Then I wait and see because I'm using the last support to ask myself, what will it do next? So up to here, then I pause. Then when I see the market go up again, when it starts going up, what do? I enter again, enter cells, 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 cells. Okay? So by the time the market is turning here, turning and starts going down, I'm already profit, 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 till probably around there. Okay? So see, most people are busy chasing the market. They're doing sales when it's going down. That's very risky. All right. So as it comes down here, see, I know that it's rallying to come there. So before it even gets there, what do? Just before, when I see that last big candle there, I know what will happen. I start buying. I start buying. I start buying, buying, buying. And as it goes down, I make my buys heavy, heavy, heavy until it gets there. So someone might argue, but now you're counter trading. Well, kinda yes and no, but that's what exactly the big banks do. You want to trade to make money, not like the retail, no, because retailers here are selling. Retailers are selling, but for you, being like the big banks, you're buying, 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 buying. If you start buying from here, in fact, from here, as you go down, what will happen? See this candle here, the green candle. The green candle, as it forms, will give you all your profit, everything. Okay, and then once it stops, you then wait and see what it will do next. Well, you don't have to think very far. You know that if the market will continue going up, it will show you, it will confirm. If it's going to go down, it will show you again. So I think after the second candle here, it'll be clear that it's going down. So then you start again doing what? Buying. Start doing buying, buying, buying. And as you can see, when the market rose up again, and you're in profit. So whereas people are chasing the market, doing sell, 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 well, they start getting stopped out. So in one of the videos, I think I explain a lot about that. Okay, so let me not get carried away. This is supposed to be a video about your trading zones. So, and your trading zones, like I said, are on your support and resistance. So again, you look at your significant points, turning points. Again here, what will happen to the market? Either go down or up or consolidate. So it came back there, okay, and then it comes back there. So it visits the place several times before it makes up its mind whether it's gonna go up or down. Okay, and if it goes down, when it decides it's gonna go down, it will go down and stop at the next zone. So what should you be doing here? Well, for most traders, this is the time to get ready for a buy or a sell. But you see, this has been a downtrend for a long, 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 long time. So because it's a downtrend, it means that around here there are so many banks that want to start buying. Okay, but most retailers will still be selling. See, and as they're selling, they get stopped out. Just like I told you guys. For me, here, I'll be busy buying. Be busy buying, buying, buying. Why? Why? Because I can see it's almost here, and the market will try and retrace it. So the big banks will start buying here, being buying, 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 buying. While people are selling, 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 the banks are buying. So let's see what happens. If you are selling here, then suddenly the bank does this. Oh, where was it? I think, yeah, we're here. Suddenly the bank decides to go up on you. You will have lost. But the person who was buying there, all the way down, imagine the number of pips they'll have made from here to there. So the moral of the story is this support and resistance points are your friends. That is where you focus your trade. Okay? And the strategy I have taught you, and I give you 3 signals to open your eyes. Basically, you don't have to think. I'm doing the thinking for you. Like this is a good, interesting one, an easy one right here. Okay, so from this point, the market consolidated 3, 4 candles there, and then it went down. But we knew because of the momentum here as it's coming down that it might still continue going down. So you know that even if you put up your sales here, chances are it will go down to the next level. Now, on this level, because it's a 1 hour time frame, When you see this, you get ready for a breakout. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. So for about 9 hours, the market was not moving much. So what will happen? Okay. What I normally do is I set up a triangle, a rectangle, where the shapes. Okay. I set up a parallel line or shapes there. Okay. I'll use the parallel lines on the right. So these are tools that you can use. This is the parallel line. I like the the ones I normally use, like setting up a triangle or a rectangle. Okay. So this thing will tell you, this one is not very user friendly. If you don't like it, you can use the other tool. There are many tools. You can still use trend line, but yeah, this one. I can draw that line there, and I can draw another one there. So then what do I do? Once I've drawn them, then I take the trades. So I measure, I look up and say, if this market was to break up, where is it going to stop? Well, because of this long candle here, chances are it'll come back and revisit this high. So I want to set my pending buy and take my profit just before the last high. So that's why you find that I go like 10 pips after there, I do a right click and then I do a buy. You know, I do a buy stop there. Okay. Oh, okay. I've not used this before, but double click, single click. Yep. No, single click. Stop loss, take profit, market range. All right. These are settings that you have to set before you take your first trade. Then apply. All right. So I come back here and 10 pips above that, I measure 10 pips. Okay. Above that. Okay. That's 30. That's 20. 10. Both there. I right click and do a buy. It's settling a buy limit, but it's okay. I will change it later. So I've already taken a trade here. From here, and I'll take profit somewhere there. Then you come back to the trade. If you look here, there are positions you've taken. So here is one of them. Okay. Orders. The pending order. I come back here and then I modify. Okay. When you modify, you set the take profit and then you set the stop loss. So stop loss, I normally put 35 minus 35. Others put even more. This is just like an emergency eject button, which means if suddenly the news went against you or something, or there's something going on, then you'd be removed from that trade safely. And then you take profit, you might just want to take 10 or 20, depending on the time frame. So this is a 1 hour time frame. So I'll put 10. Then I do modify. Yep. Oh, somebody asked me in the morning, can you put expiry? Yes, you can. If you want it to expire within a few hours, or you can even specify the time, then you put it there. But for me, sometimes I leave it. Why? Because sometimes the market moves so fast, and you can benefit from that. You can actually, it can go, take your buy profit, and then come back down and take your sell profit. And then do okay, done. Once you've done the first time, then the second time you try and do it will be very easy. So on the bottom part, this is your line where they are all touching. About 10 pips or 20 pips below that, you look to the left and find out where is the next support resistance. Well, we know that this market, if it is to go down, probably just go to the next level. So you go there and you right click, so maybe like 10 pips below that, right click and you do a sell stop, click on it, takes a trade. You come to your trade here and you modify. Why? Because you want only 10 pips. And so you come and you take profit 10. Okay, and your stop loss minus 35. Why minus 35? It can be any other number, but I choose minus 35 because it's far enough, can give you enough cushion in the event something is happening in the market. Okay, and that's done. And that trade is set up already. So